morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at the conglomerate sector and two of our local boys, Ansa McAL Limited as well as Massy Holdings Limited, for their respective financial results ended for the 6-month period, June 30th, in the case of Ansa McAL, and for the 9-month period ended at the same June 30th for Massy Holdings Limited. Now, it was very much a theme of recovery and some progress for both conglomerates. How did they perform and what can we expect in the coming months ahead? Well, let's take a look. So firstly, we're going to take a look at Massy Holdings Limited. And for that 9-month period ended 2021, the group would have reported an earnings per share figure, including some discontinued operations, of $4.85 per share, which is a very tidy 41% increase from the $3.44 recorded in the prior comparable period. Now, very impressively, even in the current conditions, revenues from continuing operations were up just around 5.7% from $8.1 to $8.57 billion. Operating profits after finance costs were also up around 23% from $486 to $601 million. And profits attributable to shareholders also increased at 41% from $356 million to $477 million. Now, when we take a look at Massy's profit before tax performance by each of its operating segments, we can see that there was some mixed results, but generally there was a very positive improvement in that profit before tax figure. When we take a look at integrated retail, for example, for that 2021 period, 9-month period that is, that particular segment would have recorded a very positive 15% increase in profit before taxes from 253 to 291 million. Gas products up just around 4% from 137 to 141 million. Motors and machines struggled a bit, falling actually in terms of profit before tax from 103 to 83 million. And financial services, on the back of much more benign and favorable financial markets, of course, would have improved from 80 million to 111 million in profit before taxes. Now, when we take a look at geographical composition, well, the diversification strategy of Massy continues to pay some measure of dividends for shareholders. And of course, we can see that Trinidad and Tobago in that red segment there continues to decrease in terms of its relative importance to the group, falling from 43% or 44% to 36.5% in terms of profit before tax contribution to the overall profits before taxes. We can see some notable improvements in Colombia, which would have improved from 3% to 6.3% in terms of that contribution to PBT, as well as Guyana in that green color, increasing from 18.3% to 21.6% as well. Barbados with a marginal increase also from 16 to 17.9%. So at a price of $85, Massy is trading at a price-to-earnings ratio inclusive of those discontinued operations of around 10 times, which is below the sector average of 16.5 times. Excluding those discontinued operations, that price-to-earnings ratio increases to just over 17 times, so pretty much in line with the index or the sector rather average. And the stock does offer investors a dividend yield of 3%, which is slightly above the sector average of 2.5%. So on the basis of increase in revenues, that continued geographic diversification, which is expected to continue providing some level of stability and growth platforms for the group. But again, layered with that overall degree of economic uncertainty at the regional level, Bourse is going to maintain a neutral rating on Massy. Turning quickly to Ansa McAL, and for the 6-month period ended June 30th, 2021, the group would have recorded an earnings per share figure of $1.11 compared to that 48 cents in the prior comparable period. Of course, that was a very significantly COVID-hit period, a 130% increase. Revenues were down marginally, just from $2.7 to $2.67 billion. Operating profits up, as mentioned, from up just about 100% from 151 to 316 million. And overall profits for the period increased a very impressive, or recovered rather, from 96 million to 225 million for that 6-month 2021 period, a 153% increase. When we take a look at McAL's profit before taxes by segment, we can see that it was very much a case of recovery, where the media and services would have recorded another loss. Insurance and financial services, again, because of very positive financial market recovery, would have improved in terms of PBT contribution from 46 to 161 million. And we would have seen very similar moves in the manufacturing, packaging and brewing segment, as well as the automobile and distribution segment. Now, at a price of $59, McAL or AMCL is trading at a price-to-earnings ratio of 19.1 times, slightly above that sector average of 16.4 times, and offers investors a dividend yield of 3.1%, again above that sector average of 2.5%. Now, the group continues with its measured acquisition initiatives to foster that growth, but with relatively high valuations, despite improved operating efficiency, and again mentioning that those continued growth initiatives, but overall layered by that economic uncertainty pervading the entire region, Bourse is going to maintain a neutral rating on Ansa McAL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com and check out our website at bourseinvestment.com. And of course, you can catch us in the business section of of Monday's business Trinidad and Tobago business section of Trinidad and Tobago Guardian, that is. So stay safe, get vaccinated, and see you next week on the Bourse Report.